Good morning. This morning I'd just like to talk you through the full year earnings released by East African Breweries, majority shareholders Diageo of the UK, and the market capitalization of breweries is $1.81 billion US, which I think makes it the second highest capitalized market cap stock at the Nairobi Securities Exchange. Revenues came in at 73.5 billion shillings. Profit before tax declined 12% to 11.7 billion. Full year profit after tax declined 15%. Full year earnings per share down 26% at 7 shillings and 19 cents. Final dividend 5 shillings and 50 cents. Full year dividend payout 7 shillings and 50 cents, which was more than the full year EPS. Now, 5% revenue growth. They're talking of a significant improvement in performance in the second half, with net sales up 10% in that period. Spirit sales increased 8%, mainstream spirits up 23%, beer plus 4%. And it's interesting that for many years beer was obviously Tusker lager is a totemic, iconic Kenyan beer. You can find it in many places like New York and London these days. But it's ironic because Diageo itself is more of a spirits company. Innovation delivered good performance, contributing 22% to Eabl net sales, Serengeti Light in Tanzania, Tusker cider in Kenya, and Uganda Waragi flavors. Gross margin up by 4%. Marketing spend, they hiked 19%. They're talking of the decline in profit after tax being as a result of one-off tax provisions. And I'll get to that in a second. In the year, we spent 13 billion shillings on capex, 7.8 billion of that being spent on the Kisumu brewery. If you look at revenues, Kenya, which is the biggest slice, was up just 1%. Uganda was up 4%. Tanzania, which is the least of the three, was up 41%. Volume was up 7%, net sales up 5%. Kenya is 73% of total revenues, up 1%. Uganda 16% of total revenues, up 4%. Tanzania 11% of total revenues, up 41%. The total up 5%. In Kenya, they're talking of a bottled beer turnaround, sales growing 5%, Scotch up 4%, mainstream spirits up 22%. Senator decline driven by uncertainty and plant shutdown in the first half. Total spirits up 7%, constrained by uncontrolled imports, they're saying. Tusker and Guinness delivered an 11% increase in premium beer. Volume measured in MEU, 12.5 versus 11.7, up 7%. Broad-based growth weakened by Senator Cake, in capital letters in this report. EPS further deteriorated by higher non-controlling interests at Serengeti breweries. Net borrowings 27.5 billion shillings, $275 million. If you're converting it. EPS further deteriorated by higher non-controlling interest, as I said, and then they're talking of a one-off provision for tax exposure. Priorities going forward: commercialize the Kisumu brewery, drive margin enhancement, strengthen re-recruitment of bottled beer consumers, win in premium leading with Scotch and vodka, go bolder and faster with productivity initiatives, sustain spirits growth momentum, accelerate innovations. Look, it's a really, really strong franchise. I've looked at it for many, many years, in point of fact, through at least 4 chief executive officers. Clearly, 2 elections, a drought and a credit crunch crimped Kenya, but they're making a big capex investment at the same time. they're signaling a second half acceleration. Tanzania is a standout. So overall, notwithstanding the fact our price earnings ratio is now 31.988, I think we could dip down to around the 210, 220 area. But there we'll find good support. I'm going to go to the investor briefing this morning, and we'll film that and hopefully publish it later on this afternoon so you can get a bit of flavour of what's exactly been happening. Thank you for stopping by.